Traditionally, alternative asset managers, including Apollo, have liked investing in credit that is not traded very often, right? You invest in a company, you get more control, you also have higher yield. Is that the same now, or do you find more opportunities in the public credit markets, given that yields are now north of 10% in many cases, and arguably north of 8% even for pretty high-rated credits?
Well, there's a lot you brought up there. In our credit business, we are really a performing investor. We're looking to extend capital to companies that are growing and get paid back. So there's not really a distressed angle in our typical credit business. As you raised, when you have the dislocation we've had thus far, there are opportunities in the public markets, in the investment grade market, with low dollar price, long duration assets, pretty interesting opportunities. In the private markets, new capital is coming with better terms and better pricing. So you're at this unique period right now where there's actually opportunities in the higher end of both of those markets. It's interesting. High yield on a yield basis is somewhat attractive. On a spread basis, it's sort of historical levels. The spreads this morning are mid 500s, approaching 600. That's typically a time when you get interested in high yield. Right now, the yields are approaching 10%, which is a very attractive number. So, it's my view that, having done this for a few decades now, things are happening faster and faster and faster. The rate rise in the U.S. and globally in the last, 6 months has been historic in not only the speed which it's happened, but also the amount. And in the past, that might have happened over 12, 18, 24 months. So it's my suspicion that by the time we really are officially in a recession in 23 or 24, the opportunity to buy paper some of it will have evaporated. So you have to be measured and patient along the way.
Do you think we're going to see a default cycle akin to what we saw in 2008 or even some of the prior ones in the early 2000s?
Yes, you will see some degree of a default cycle. You can't slow down the economy with the brakes that the monetary policy is leading to today without expecting some accidents. It's going to happen. Resi mortgages have gone from the low to mid 2s to north of 6%. There's going to be a default cycle. It may not be as pervasive, it may not be as wide and deep, but there will be some companies, and also not only the amount of debt, but the actual interest costs have increased dramatically on a floating rate basis.